Well, Fusion Microfinance made its debut today. It was a muted debut on the Lal Street. The stock listed at 358 rupees, which is a slight discount to the issue price. To discuss this and a lot more, we're joined by Devesh Sachdev, who's the MD and CEO of Fusion Microfinance. They provide microfinance and MSME loans, machinery loans, small business loans, etc. So in that sense, they cater to a lot of perhaps rural tier 2, tier 3 markets as well. Devesh, thanks a lot for joining in. I want to... Okay, we'll go to the management in a bit. I think there's some issue with the audio. But for now, the stock is taking a big knock. It's down almost about 7% odd. So definitely having a bit of an issue there. Remember, the return ratios for the company, for the MFI, have been very weak until Q1 of last year. And that, I think, is something that has concerned the street. It's also an expensive issue compared to its peers. So perhaps that's something that the street has not liked as well. The credit rating has been on the lower side. So, you know, that's something that the street has not liked. But it does have a huge penetration, and it has a well-diversified presence. So we'll try and touch base with the management in just a bit. For now, the market is very quiet. Okay, I think we have him with us. Devesh, is my voice reaching you?
Yes.
Okay,
yes,
great. This is Sonia here. You know, I just want to talk a little bit about the concentration risk. You're concentrated in states like Bihar and Uttar Pradesh, and you do cater to a lot of the small business owners, microfinance, MSMEs. Would you want to sort of lower your concentration risk, and what is the way forward, you know, say over the next 1 to 2 years in terms of either geographical spread or diversification?
Yeah, I think, Sonia, thank you for having me here on your channel. So, I think one of the big differentiation which we bring on the table is our diversification. We are in 19 states, not a single state where our portfolio is more than 20%, not a single district where our portfolio is more than 3%. So we are India's, I think, one of the very few organically diversified companies, Sonia. And if you also look at our ticket sizes, our average outstanding, we have 3 million clients with around 25,000. Our disbursement size is around 35, 36, which is comparable or lower in the sector. We are, I think, we have the largest customer base. We have 3 million clients. Last year, we added 600,000 new customer. So I think this one big, you know, key strategic competitive advantage we bring on the table is the fact that we are very diversified. We are well established in some of the northern states. You talked about UP, Bihar. We have a long history, and we are very well established in some of these geographies. And we have been very, very careful about building the portfolio and managing the concentration risk.
Morning, and thanks so much for joining in. Given where you operate in, are you at risk when in the election manifesto for various states they offer any kind of farm loans, waivers, you know, when that plays out, because very often we see that across states, is that a big risk? Do we see historically that your performance, your NPAs get impacted?
So, you look, the overall, you know, understanding of the sector has really gone up. It has happened because as a sector, we have an association, MFIN. We have really done a lot of work in really, you know, telling the state administration, policymakers, and especially at the ground level, the differentiation between microfinance. We were earlier, you know, treated as a chit fund company. So I think that differentiation has now been created. The understanding about the microfinance sector is very well established. And this risk has drastically, you know, gone down. We have seen elections in the last few years. All the major states have went through elections. We did not see any kind of such, you know, announcements or their impact on the clients. Clients understand. They have a record in credit bureau. They want to pay. They want to keep their records clean. And overall, if you see the policymakers, the government, the current regime, they have a huge focus on financial inclusion. So this risk has drastically gone down over the years because of combination of all these factors.
All right, that point is taken. Hi, Mr. Sachdev. This is Pavitra. Thanks for joining us. Like we were pointing out a short while ago, your return ratios up until Q1, that is right before your listing, were looking quite weak. Now we've seen a sharp improvement. Do you think that this is something that you can sustain at these levels? And also, after this fund infusion that you did see through your IPO, do you expect the ROE to trend lower?
No, so if you look at our 12-year history, so you factor into two important points here. One, we have been growing consistently. We have been adding branches. We added 400 branches last 3 years. Look at the portfolio growth from 3,600 crore in March 2020 when COVID started to now close to 7,400 crore as of June. There was an impact. We all know, pandemic has impacted. But if you take out some of these outliers, I think we have been given good returns on both ROA and ROE. All the pains of the COVID are behind us. We have front-loaded all the provisioning. We were building. A lot of investments have happened. 400 branches have come up last 3 years. All the levers are in place. That's why if you see that I also want to share with you that yesterday CRISIL has upgraded us. Our rating has been improved from A- stable to A stable. So I think we have all the right levers to give a very consistent returns to all our shareholders.
Okay, all right. All the best. Thanks for joining in. The stock, though, continues to be under quite a bit of pressure, but the management promises that consistent returns to shareholders is their priority. We'll slip into a short break. When we return, we'll be joined by the LIC chairman, M.R. Kumar, to discuss the company's second